This is going to be another update on Solana. We've had some nice price action, and we'll be getting into the chart and trying to figure out what are the potential moves that could happen next into the Fed meeting. Federal funds rate being announced tomorrow. We have earnings for big companies, Apple, Google, that could affect the markets within these next few days. Well, how I see the market is that we had a move down. We may continue a bit lower, and the Fed may come out with a 0.25 basis point, and probably the market has priced it in already, but the tone of the Fed may come out a bit hawkish, which would cause the markets to go further down, or this drop down is pricing in the Fed's tone, and we're going to rally after the Fed meeting. But overall, I'm looking at the dollar index. The dollar index is trying to move up, is crawling up, and it looks like it has a bit of bullish momentum. The ES1, the S&P mini futures, is still above the descending trend line, so it is not broken down into that descending trend line from its all-time high. So we still don't have much reason to be bearish. There's going to be a lot of news plays, so you need to be aware of the markets. You have to be aware of that. So if you haven't already, if you like the channel, subscribe to the channel. If you like this kind of content and you like the video and join the free Discord. Down at the video description and in the channel description, there's a link if you'd like to support the channel. There's a link that would take you to PayPal to support the channel. Okay, so this is Solana on the 4-hourly. Solana was essentially traveling in this green rising wedge, which is a bearish pattern, and I was expecting another move up. I still think there might be one more leg up, but we'll have to see about that. So we were traveling up this green rising wedge along, and we had this purple trend line, pink trend line. This was the uptrend trend line that we broke down from, and we broke down from the wedge. The measured move of this green rising wedge, the breakdown measured move of this wedge would take us, if this isn't a fake out, because we've seen a fake out in some other coins like Ocean. I've seen a triangle fake out. The measured move for this would take us down to, I believe, would be the 21 region, somewhere around there. Yeah, so let me just get that line right. We measure the mouth of this wedge and break it down to the breakout candle, so we have an exact estimate, if that makes sense. We could go down to the 19.5 zone. Now, taking a retracement of the wave 3, which started down here, and possibly the wave 3 finished up here, not up here. There's a possibility we finished up here, and that will give us a fib retracement between the 0.236 and 0.5, which gives us this big green square. Possible support zone for a wave 4. If this was a wave 3, we're in a 4 and we're going up in a 5. Another possibility is this move over here, starting from here to down here, was a corrective wave in a W or an A, going up in a B, and this is a C wave coming down. Maybe it's an expanded B, expanded flat correction. I'm not sure, but some corrections do exceed the previous wave, so the previous high could be taken out by the B wave. So if we take that and take a measured move of this, and we get a support zone where it could stop dropping. It could stop dropping right over here, but I think it could stop dropping. It's at the golden pocket. It is kind of bouncing off. I think the $21, which is a 1-to-1 extension, to the 1.618 at $18, 18.7, so roughly $19. So those two squares that I drew, they intersect in this zone over here. Let me just highlight this zone over here. As you can see, we are intersecting in that zone. Now, Look for more confluence. If we go on the daily time frame, we have the 50 EMA coming into that zone. Let's get rid of the highlights, which would be a good support. So if we come down there, I think it would be a good zone. We would be coming into a fair value gap somewhere around that zone. On the, let's go to the 4-hourly, we might see something. Yeah, we have a fair value gap here, we have down here, but this zone that I marked out is a high chance of a bounce. We have the 50 EMA on the daily, we haven't tested in a while. So if you go back to the indicator and go to the daily and look how long we haven't tested the 50 EMA. We haven't tested it since the 14th of January, more than 2 weeks. So it's about time we could come down and test it and go for another leg. I'm not saying we're going to bounce for sure, but what I'm saying is that it's a high probable zone that we're going to drop to, if we're going to drop. We could initially also continue higher, and it could take us up to the 28.6 zone, the top of this rising wedge. But as you can see, we're below the rising wedge, and we have broken out of the impulse trend line that I had, and we're getting rejected at the impulse and at the 50 EMA on the daily, on the 15-minute time frame. Yeah, so that's my update for Solana. So potential a bit more downside before another move up, but if we don't hold those zones that I just called out, we might have more downside, as I mentioned in my previous videos. You also have the value area high of the entire down range over here, which comes at 18,343. So mark that out on your zone as a last, on your charts. That could be like your last support. But in my opinion, if you start losing the $20 zone, you could be coming down between the $11 to $16 roughly for Solana. That's it. Like and subscribe to the channel. More trades. I'm out.